Hey folks, Dan Frio here with your closing bell for July 21st, 2025. So really with no economic news out today, mortgage rates fared pretty good. Mortgage rates dropped a little bit further than I thought. I thought we'd hit 6.8% today and actually went to 6.78 today. But it wasn't for any economic news because you go over to the economic calendar. Really nothing today, Monday. There's really nothing tomorrow, Federal Reserve Chairman speaking. And then on Wednesday, we have existing home sales. And then we get some jobs reports. So what are we going to talk about in today's news? Really, there's nothing here. Well, let's get over to Goldman Sachs. They came out with their mid-year outlook on housing. I'm going to break it down, basically what they're talking about. And I'll give you my take on it, if it's good, bad, or indifferent. And then we'll get over to the indices and how the markets are faring today. I think the equities are faring pretty good. And bonds, as we've seen right through here, they're doing pretty good as well. So let's get over to it, folks. My name is Dan Frio. I do this report twice a day to inform you guys what the heck's going on with those things over there and the whys behind it. And the biggest thing is the whys behind it. Okay, so what we're going to talk about today is right through here. Goldman Sachs came out with their mid-year outlook and what their projections are. And so I thought I would break that down for you today because you're going to hear probably some of these things. And some people are going to say, well, the markets are crashing and the markets are doing this. Well, let's go over and see what Goldman Sachs has to say. And it was just published today, so let's break it down. So right through here, Goldman Sachs came out with their forecast as we're heading into the latter part of 2025. Signs are pointing to a cooler housing market, according to recent studies by Goldman Sachs. So let's break them down. Home sales are slumping, fewer transactions ahead. So what are they predicting? Well, if you look at this, Goldman Sachs is predicting 4.1 million homes to sell. That is 23% below the 2019 levels. And the reason why we look at those levels is those are the factors or the dates before COVID. You know, that was before the world went crazy. Okay, that was basically before, well, when the markets and basically when the whole world was kind of in its sane point, and we have some focal points to look in at. So once you got COVID, everything went crazy. The Federal Reserve dropped rates to zero, and everything went to a mess. But what we want to focus is the date prior to the COVID and all those things happening in regards to interest rates and the housing FOMO. So let's get over to it. Here's the interesting thing about a lot of this. With most homeowners locked into low rates, many under 5. Okay, let's read the rest of this. This is where the sticky part gets. And this is why a lot of people, I had my son, I talked to him this weekend. I actually was at a wedding and I talked to a few younger couples who either bought homes or they're looking to buy homes. And this is actually what they're talking about. Is they're like, well, my parents and my aunts and uncles, they're all basically, they're not stuck, but they're in a house with, if they needed to downsize, they would have to have a bigger mortgage payment than they are in their house that they have now. So it just doesn't make any sense. And that's why a lot of people they're saying are locked in to those low rates because you really don't want to trade them in. But let's get over and look at the data here. With most homeowners locked in to low rates, many under 5%, they're not willing to sell that property. In fact, 87% of homeowners have a rate of at least 1% lower than current rates. 66% of them have a rate 2% lower than current rates. I'll vouch for it. I have an interest rate on my home at 2.625, and it was a 30-year fixed at that time, and I didn't pay points and fees. Yeah, I do it for a living, but I got it at that point in 2021 when rates are basically the lowest we ever had in history. So what's going on now? Well, mortgage rates are going to continue to stay high, and here's the reasons behind it. While the Federal Reserve may consider rate cuts, mortgage rates remain stubbornly high, hovering around 7%. Treasury yields remain elevated this time, meaning we might not see much relief to borrowers here in the recent, basically between now and the rest of the year. A lot of stuff short term is going to be focused in on what the tariffs do, because we know the Federal Reserve, they're basically sitting on the sidelines right now, just saying, okay, we're not going to do anything until we know what's going to happen with tariffs. Well, then Trump's working over there on the tariffs and everything else, so he keeps moving the pendulum every day. So how's the Federal Reserve really supposed to act? Well, I'm kind of on that bandwagon, but I'm also saying, Fed, when you have your inflation rate, the inflation rate that you monitor, you're saying is at 2.3%, and you have the federal funds rate at about 4.5%. it's a little elevated. So you can at least pull out at least 0.5% in rates right now. Shouldn't have really much effect on things. And even inflation ramps up from there. I don't think 0.5% on the federal funds rate is really going to make much of a difference, but that's my take on it. Inventories are starting to rise. That's what a lot of people are freaking out. They're saying, okay, inventories are rising and rising and rising. Don't you get when you have too many houses for sale, you're going to get a housing crash? Well, let's look at their data. We're seeing more houses on the market. Actively listings are roughly up 37% since January, but demand hasn't followed. Buyers are still hesitant because they just, they're waiting for rates to do what they're doing. They're also waiting for the economy to basically all the tariff news to trickle through the economy to figure out where it's going as well. This shift could be a big win for buyers who've been priced out over the last few years, especially in overheated markets. What you're seeing also is home construction starting to slow down because home builders, they're getting elevated costs, which is right here. Builders are tapping their brakes due to high construction cost, tighter lending, and declined buyer demand. And we saw that last week and the week before with a lot of the new homes. The new home market is kind of plummeting right now. We'll get existing home sales this week that should give us a gauge on what's going on with this. Home prices leveled off. I've been saying for the last probably 2.5 years, I would see or predict a complete stagnant market. Now, when I say that, I say nationally, because we're going to have some markets like I'm in Chicago. We're up about 6 or 7% on average right now. So if you have Chicago's market up 6 or 7%, well, then you're going to have other basically areas that are going to be down 6 or 7%. Where are those going to be? Well, let's get over to it. Where were the prices the most hottest? Where was FOMO the hottest? Well, let's break this down. Home price appreciation right through here is cooled off. Goldman Sachs says they're predicting a 0.5% growth in 2025 and a 1.2% in 2026. Some of the areas that are going to be affected on the downside: Miami, Orlando, Dallas, Nashville, Austin. Those are all areas that saw rampant price appreciations and people running there during COVID when they can work remote. So it was crazy. We'd had people from the East Coast moving to Austin. It's like, why? Because I can. I'm a remote worker. So that's what we saw transpire during that time frame. So what does this mean? Well, let's break this down. And I broke it down individually so I can help each one of you guys out there. What are you looking to do if you're a homeowner? Well, if you've got a mortgage below 6%, stay put. We actually have a 5-day HELOC available. So if you have that low rate and you're like, man, I'd like to tap into some of the equity I have, but I sure as heck don't want to cash in my low rate. So can I access some of that equity in my home? I'm going to have a 5-day HELOC. It's going to be launched this week. So I'll be promoting that for those homeowners out there. If you're a buyer with more homes on the market and less competition, what's that mean? Your offers are going to get accepted a little bit better, but be careful where you live. I still have multiple people throughout the country. It's like every weekend they're going out, they're putting bids on homes and they're losing it. My son actually was trying to buy a home here locally. He's upgrading. He wanted to buy on the river, and somebody came in and we looked at it. Within 24 hours, it got listed. On Thursday, we went there. Friday, they got a cash offer, unseen, as is. People are crazy. So you should go and see these properties, but they're gobbling them up, folks. So some areas are still really hot. Some areas they're going to be cool, and that's when you're going to have negotiation powers. Builders and developers, it's tighter. Few buyers will continue to dampen the construction environment, and investors, just pay attention to your market. Because you're going to have markets like Chicago, believe it or not, Cleveland, areas like that, they're having a pretty darn good market. But then you're going to have areas like Orlando and Austin and Dallas. But the final takeaway of this, folks, is the housing market isn't crashing. Okay, you're going to have pockets of areas dropping. You're going to have other pockets stagnant. You're going to have other pockets up a little bit. I don't think you're going to see rampant appreciation in any areas, nor do I think any areas are truly going to crash, because investors at some point are going to jump in and buy up that inventory. So right now, that's what we're seeing right through there. So with higher rates, slower sales, you're going to have a little bit more purchasing power, most likely, in negotiations, but it depends on where you live. So why do I do these reports? Well, the reason I do it is I'm actually a federally licensed mortgage loan officer, folks. I'm licensed in all 50 states as well as Puerto Rico. The reason for it is I work at a federal bank. Yeah, that's what I do. I'm a federally loan officer at a federal bank. The unique thing, and the reason why I'm at this bank, is they took it upon themselves to become also I guess I'll say it this way, it's a large brokerage is the only way I can capture it. We're set up with 33 lenders. So I can lend you, we do loans here at the bank, but I also have 33 other lenders. And the reason why they did this, a lot of us that are here at the bank, we've been doing this for years. I've been doing this for 35 years. And we said, what would be a good atmosphere for our buyers? Because if you're out there looking to buy or refinance, what are you looking for when you're looking for a mortgage? Somebody you can know and trust and, at least get some rapport with. And then who's got the best rates for me? So you're going out there and you were told, get 3 or 4 quotes, right? Well, how about if you can go to my website, and I'm going to show you that here 1 second, right through here, the rate updates. What if you can go through here, put in your application one time, we're going to pull your credit one time. We're going to get you quotes up to 33 different lenders. That's how we do it. We're not going to give you all those quotes. Basically, what we're going to do is run it through our computer system that we have. It's going to sort all the lenders that we're associated with throughout the entire country, put the number one rate up at the top, and that's the rate we're going to offer you. So you use me, yours truly, to go through this entire process. How do you get there? Go to therateupdate.com. You can give us a call right through here. You can ask me a question right over through here. You can put in your application here. But first off, what are you looking to do? Are you looking to buy? Well, scroll down through here. You might qualify for our $7,000 down payment assistance program. If you're looking to refinance, we'll click the refinance button and give me the rate that you're looking to refinance. And when the rate hits that, I'll call you. We'll get the paperwork started and get you locked in. You got another quote? You want me to compare that with all the lenders we have? Well, go to the loan estimate tab. You're going to click that. You're going to upload your loan estimate in there. And what I'm going to do is I'm going to compare it with 30 other different lenders. I'm going to send you a video back showing you who the best rate is, what the fees are, and most likely we're going to beat that rate and the fees that you have on your current loan. If we don't, I'll be the first one to tell you, God bless you. Take what you got. If you don't, if we beat it, please reach out to us, put in your application, and we'll get the paperwork started. Thanks for watching, folks. My name is Dan Frio. Like I said, I do the rate update 2 times a day and inform you guys what's going on with these and the whys behind it. Thanks for watching. God bless. Have a fantastic evening. I'll see you here tomorrow to let you know, well, no economic news, but maybe there'll be some news on tariffs or something else that might be affecting rates. So hopefully we'll see you back there tomorrow morning. Bye-bye.